Today, we're talking about one of the most common questions that I receive, especially from my military veterans who are transitioning out of the military and entering a civilian job. And this also applies for civilians that already have a job and maybe they're leaving that company and starting with another company. And that question is, can I use the new expected income to qualify for a home purchase? Today, we're going over that. Stay tuned. All right, I got my screen shared. It's a little bit easier to go over this information and share my screen. So again, we're going off expected income on a new job that's starting after the closing date of a home purchase. So maybe you're in the process of buying a home or you're in underwriting and you're transitioning jobs for whatever reason, for a valid reason, and can you use that new income for the new job? So let's go over that. All right, so here's the 4 things we're gonna go over. We're going to go over the income and how is it eligible, the start date of the new job, when does it need to start, what type of properties are eligible for this, and what additional information and documentation will you be needed to required to show that underwriter. Okay, so eligible income and employment. Here's the 3 agencies we're talking about. So we're talking about conventional loans, FHA loans, and VA loans, depending on what type of loan program you are doing. So the conventional, if you're using Fannie, Freddie, that's what I'm talking about with conventional financing. The new employer may not be a family member or an interested party to the transaction. So who is an interested party to the transaction? The realtor, the loan officer like myself, the lender. You can't be going to work for them and be trying to use that income. So can't do that. And then the income must be on a fixed based salary. So, myself, I'm a 100% commission type job. You cannot be using that because that is fluctuating variable income. We want to see stable, reliable income that's fixed in order to qualify it and use it as income. All right. FHA says the new employer may not be a family member or an interested party to the transaction, similar to conventional. They don't say anything about the income requirement, but I would definitely check with your loan officer or underwriter to see if the lender has an individual overlay. And the VA just says, hey, a valid offer of employment which may begin at or after the anticipated closing date, which can be verified. Okay, so that's eligible income and employment. Let's talk about the start date. When does the new job start date have to happen? Conventional has to be within 90 days of the note date. Note date is usually the closing date and the funding date of the loan. FHA says a little bit sooner. We need it within 60 days, and the VA technically does not give any guidance or restrictions on when does the new job. So it's going to be up to that individual underwriter. A prudent underwriter is usually going to probably follow FHA or conventional guidelines. And so again, check with your loan officer if you have any questions if you're using a VA loan. All right. What type of properties are eligible to be purchased? So in conventional, primary, second, and investment properties all can be used. Your new job's income can be used. And when I talk about 1 to 4 unit, I'm talking about, a single family residential, a duplex, a triplex, or a quadplex. So that's what we mean by 1 to 4 unit, where you're going to be moving in and living in one of the units and the other ones, may be rented out. All right, FHA, same thing, just for primary though. You can't use new job income for a second home or an investment property. And again, the VA does not give any guidance. But reminder, VA is only for primary homes anyways. So you can't buy a second vacation home or you can't buy an investment rental property with a VA loan. All right, this is important. All right, no matter what, you are going to need an executed copy of the employer's offer letter. Okay, executed meaning it's signed by the employer and signed by the home buyer, the borrower in this. Fully executed and accepted, and it's got to include the terms of employment. So what's the starting, date? What is the position? What's your actual function at the job? What's the starting salary? Right here, start date and annual income based on non-fluctuating earnings. So again, this goes back to it's got to be stable, reliable income. This cannot be a 100% commission-based job because an underwriter has no idea like how much you're going to make at this future job. and it must be non-contingent. This is extremely important that it has to be non-contingent, because most job offer letters, when you receive it, it says, Joe Smo is going to be starting on X date at X salary for this position. However, it's contingent on passing a background check, passing a drug test, and there might be other, you might have some licensing requirements or whatever. So it's contingent on the person passing those. So we can usually start the home buying process, but by the end, if you want to get out of underwriting, you're going to have to meet all those contingencies, and we're going to have to produce a new letter saying, hey, Joe has met all contingencies. It's not contingent on anything. He is set to start. Okay, so that is extremely important, that if you're trying to use any income on a new job that's happening in the future, it's got to be non-contingent. You got to pass all those checks. So I hope this helps. Again, if you have any questions, please reach out. Thanks.